What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 25th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about how the macro dominoes for Bitcoin are starting to collapse. We need to talk about what Bitcoin is already signaling to us within its price action. We need to talk about the macro developments in equities when it comes to the performance yesterday following NVDA's earnings report. And we also have to talk about not only increasing volatility, also, the dollar's continued strength over the past couple of weeks as we go into the Fed's speech today. We've got a lot of things to talk about in today's video. If you guys happen to enjoy it, consider dropping a like. It's one of the greatest ways that you guys can support the channel. And let's go ahead and kick off the rambling. All right, I want to go ahead and start here by diving into the Bitcoin chart here. First off, we need to really focus in on this, guys, because price action, this is going to be the theme of today's video. Price action tells us everything. You guys probably know it. You can check a dozen different headlines out there. You can follow a variety of people on Twitter and various social platforms, even YouTube, and you're going to hear all types of different narratives. But the thing is, at the end of the day, we need to observe what price action is telling us. It is the only way we can navigate in this environment. And what price action is telling us right now is that something's wrong. Because not only did we have an entire 2-month window where essentially no buyers came in up at the most critical range where we needed bulls to show up for Bitcoin if we were to confirm a new bull market, which would have again held the ascending channel, cleared through this range that was prior support, which has been acting as resistance, which we see now is still acting as resistance. But on top of that as well, if all of that wasn't bad enough that the bulls didn't show up when they needed to, we are not seeing them show up at the next best position, which is down here at around the range we were at in June. We are not driving higher yet. We are continuing to stagnate here. We started to get a little bit of an upturn the other day, but that was faded within the last 24 to 48 hours. So this is not a good look here for the further direction of Bitcoin to the upside, and more likely it's the counter opposite, that it's a signal that we need to move lower before we catch a bid. And if you guys have seen, again, going back here towards those capitulative times for Bitcoin, right, we had these periods of time where we ranged after a collapse, trying to see if someone would come in and give a bid for Bitcoin and drive prices higher, and then we just roll over again to a new price range. I know a lot of people say, oh, Nick, that can't happen because, those were the days of BlockFi and Celsius liquidations, all the forced liquidations in the crypto space. That can't happen again. Trust me, guys, there are people out there who are going off of the same metrics that confirm prior Bitcoin bull markets that unfortunately are not going to work this time around and are taking credit and leverage to do so. The amount of open interest that was open before this collapse we had back here in mid-August was some of its highest levels we've seen in the crypto space since back during that period of time. So we're making the same mistakes here as an industry. And unfortunately, people haven't spent enough time asking those hard questions we've been discussing here on this channel as to whether or not the microenvironment, crypto itself, is ready for a new bull market from a fundamentals perspective, and also from a point of new stablecoin liquidity in the space, which we are not getting. It is continuing to decline. And then also whether or not we've got the macro sentiment here. And I just don't think we have it, guys. Again, I'll kind of wrap up here on crypto and come back to it a little bit later on, because we do need to spend time talking about the macro, guys. I promise you all, this is the thing you need to be focused on. But just before we dive into that, I wanted to emphasize again the continued weakness here in altcoins, not only the lower highs and lower lows broadly speaking since back here in May of 2022 for over a year now, but on top of that, we can see clearly here since back towards the relative highs in early July when we had the XRP news, when again, we were talking about steering clear of the altcoin space, not buying into this news that it's a slam dunk guarantee that altcoins are coming back. Well, altcoins have declined still at this point over from that actual relative high in July, about $100 billion in market capitalization. And it looks like we're barely catching a bid here. If we don't start to drive prices higher here, and we start to just kind of fade slightly to the side here and then roll back down, we're at a minimum coming down here towards $435 billion. The same low range we were at in November, December 2022, and also the same range where we set in a relative low in June of 2022. Over a year or more of consolidation for the altcoin sector. And I think, to be honest, there's a chance we go even lower than that depending on the macro environment. Now, we've got to jump into it, guys, here. I know some of you may not be trading in equities. I know some of you may think, what does this have to do with crypto? It has everything to do with crypto, guys. Essentially speaking, what we saw yesterday was a complete gap in crap. That's a very crude way of saying it, but we essentially saw a really positive earnings report come out from the one stock everyone is watching because it is the leading stock for the leading narrative at the moment, and that is AI, and therefore we're talking about NVIDIA or NVDA, which is the leading GPU manufacturer for not only gaming equipment but also the infrastructural technology and software for generative AI. Well, generally speaking, we had a gap up here in the NASDAQ following this positive earnings gap up. We saw NVIDIA from its prior close at around $471 all the way up to $503 for the open, which was a huge gap up here. If we dive into kind of the shorter term time frame, we can see again, this was similar to the kind of move we had back on the 22nd for NVIDIA. We've seen this before, but essentially speaking, in the after hours, I think it went up as high as around like 8%, opened up here around 7%. Or 6.8% for the open, and essentially just faded those gains right away. Practically all of those gains within a matter of the first 1.5 to 2 hours. Now, this is really significant stuff, guys, because a lot of people will talk about the beat on earnings that NVIDIA had. Oh my, NVIDIA increased expectations back in the past. Some people doubted them, but hey, they even beat those positive earnings revisions for the future. So therefore, generative AI is here to stay. It's going to continue to grow, and NVIDIA just has to keep going to the moon. The thing that people ignore here is that NVIDIA has been increasing its PE multiple dramatically since back in October of last year, when essentially the generative AI narrative started and NVIDIA was going from a mere $100-something per share at those relative lows, which we can scroll back to, back here in mid-October, all the way up here to $471 a share, or $500 just yesterday. So you've had a huge PE multiple increase. So the multiple that people are paying on NVIDIA should be justifying that we're seeing continued beats on earnings, that we're going to continue to beat the analyst expectations, and that NVIDIA and also generative AI as a narrative are going to continue accelerating. But as we've talked about here on the channel, we've already seen lacking data from the fundamentals here. And I think a lot of people essentially are starting to question whether or not NVIDIA will be able to keep up this kind of demand. And not to mention how NVIDIA is really getting these revenues here. Is it from people actually buying chips here today, or are they fulfillment orders that are likely set in stone or reserved for the next couple quarters, right? And this is what I want to go ahead and talk about here. At the end of the day, guys, I don't care what the analysts say, what price projections they have. I don't care about how the earnings report even really went. I care about how the price action was. And when I see in a $1 trillion company, right, NVIDIA is now a tech giant in its own right, $1.2 trillion company, I think, at current valuations. When I see a company like that have such a successful beat on earnings, with analysts increasing their projected prices, while simultaneously the share price, the actual market rate, where buyers and sellers are determining valuation, after such an exorbitant rally here in NVIDIA, when I see a near 7% gap up in price, and all of those gains fade by the end of the day, this not only looks like an ugly chart, it smells like the end of a mania. Now, I know some people have said that AI isn't even in a bubble yet. I mean, oh my gosh. I mean, this is something that, of course, yes, it's subjective. Anyone can debate. But guys, if you don't feel like AI is a bubble, I got to tell you guys, as someone who has traded for the last 12 years, AI is most certainly in a bubble right now. Just because, essentially Microsoft hasn't smashed 100% above its prior all-time highs doesn't mean that AI isn't in a bubble. Just because NVIDIA here isn't the largest stock in the market doesn't mean that AI isn't a bubble. ChatGPT and most major AI applications are seeing declining growth over the last month or two. That is not what you see in an emerging technology, right? Especially so soon. Right? So this isn't some kind of iPhone moment here where there's some breakthrough new technology like smartphones that are just going to continue for the next 5-10 years. There is clear UX flaws here. And putting aside all that, put aside my opinions as well of it, take a look at the price here. I mean, you cannot say that this looks bullish. This is really bad stuff to have multiple trading days, mind you, where we've not only started to see kind of stagnation in the trend, we've got a big gap that is likely going to get filled here. But when you have these kind of intraday gaps that are just getting filled immediately after supposedly what was a great earnings beat, this is really a bad look for the market. It's a bad look for NVIDIA. And it showcases here that, essentially speaking, instead of when that gap playing out, buyers held it up there at the general open, or even better, would have potentially driven it higher to signal real interest and more buy-side demand after an announcement of a $25 billion stock buyback program. No, instead, we saw the counter opposite. We saw the worst case scenario. We saw NVIDIA closing all of those gains. And it's because all of these developments here, guys, are the kind of signs that we see when a bubble is topping out. That expectations from analysts, from the company themselves, get way too absorbent and too excited. There's too much exuberance in the air. When a $25 billion stock buyback program comes out, a lot of people think, oh, that's forced buy-side pressure. That's going to be good. That means that they're essentially expecting sellers are coming in. All right? So they've got to contract the share price. They've got to use cash on their balance sheet, which, mind you, is getting weaker here, not stronger, even after these earnings beats. And they need to put that towards buying their own shares rather than innovating in their products. To be honest with you guys here, if you're chasing NVIDIA after a 4x in price, a 500% move, be careful out there. And I got to tell you guys, again, you don't have to just follow what I'm saying or follow NVIDIA's price. Look at the performance here in the NASDAQ. We're getting our first bounce here since back in mid-July in equities. And we just get a complete slam down. Right when bulls should have taken control and leading forward, retracting this loss within a couple days. That's what happens during bull markets. And you see it in price action. The people are knowing that they can buy the dip. Smart money knows they can come in on those 10-15% discounts. They can scoop up the leading names, the market leaders, and continue to charge forward. You do not see days like this when you're in a bull market. A 1.8% move to the downside after NVIDIA has a supposed amazing beat. I'm not here to be negative, guys. I'm not even here to say that AI doesn't have some potential. I've toyed around with generative AI tools since they came out, as many of you have heard me say before. I'm not here to be negative. I'm not here to bash on potential innovation, but I gotta tell you guys, AI itself is not some magic wand that you can just wave across the air and the entire stock market is gonna continue moving higher. What I see here is a short-term head and shoulders pattern. If this rolls back over, especially off of the next macro event we're going to be talking about, which is happening today, then we've got a lot of pain coming. And this will have been one of the biggest relief rallies we have ever seen in U.S. stock market history, comparative to the decline. This is going to mean that so many investors who believed that this was a new bull market and bought into the same time-tested technology stocks that led in the last bull market, as if they were going to be market leaders this time around because of generative AI, are going to get cooked. And it is why we've been so vehement here on this channel about being in cash and not going all in on those same plays. Prior market leaders, like the FANG stocks, Meta, Amazon, Netflix, Google, and even names like Tesla and NVIDIA and Apple and Microsoft, are likely not going to be the same stocks. The multi-trillion-dollar companies as they are today are no longer going to be able to multiply like they did in the past, and therefore investors are not going to continue paying such a high PE multiple because they can't keep growing like they did over the last decade. You just simply, there's a limit for all companies at some point, and that's the problem, that people have unfortunately ignored the fundamentals because they've just chased the narrative, just like a flock of sheep, taking in this idea that AI is just guaranteed to keep moving up. I want to go ahead and talk about what really matters here, guys. Yesterday, we not only had the BRICS meeting, where essentially everyone, after seeing this event where there's a whole range of other countries that may be invited into the BRICS organization, that essentially speaking, this is the death of the dollar. It's time to go long Bitcoin or any alternatives. And again, this narrative just keeps coming up. Well, if we take a look at what really matters here, which is the performance of the dollar against other world currencies, we see that the dollar moved up here. Essentially yesterday moving up between now and yesterday about a 0.75% move in the dollar. Pretty huge move up here at a critical time. So the dollar is not declining here. It's actually, again, back at its strongest range here since back in May of 2023, in the same range we were at as far back here. I think, let me just scroll my chart here, back here since December 2022. So the BRICS narrative was generally being pushed back here in April and also during this period of time here. And it seems like the dollar is completely immune to this here, right? So if you're following those people who, again, I understand some people don't want the dollar hegemony. They don't want the dollar being the world reserve currency. They dislike the U.S., maybe for its foreign policy. Look, I'm not saying that emotion is not justified or that you guys feeling that way may not be justified by any means. But again, I'm coming from an investor perspective here, from a trader perspective here. When the dollar pops up like this after yesterday's meeting and clears through nearly a year's worth of resistance since back in last November, that's something I'm listening to. And when that's happening at the same time where equities and crypto are declining substantially, where Bitcoin drops 7-8%, when equities finally start to get a serious negative bid to the downside, I'm listening. And I'm getting ready to short. I'm getting ready to, if anything, long the dollar and short everything else. And the reason why is not just because of BRICS being an oversold narrative, right? We've already talked about this before, that essentially whether we like it or not, the dollar, the euro, the Japanese yen, and the Great British pound are the four kind of stationary world reserve currencies because of the fact that they are places where people don't mind immigrating to, they don't mind storing their wealth there. These are areas with some of the strongest military capacity, mainly due to the United States. They are places where essentially people want to put money, right? And because of that, that is what gives them their world reserve status. Sure, the petrodollar maybe plays a role in that. Sure, there are other secondary things. But at the end of the day, people want to immigrate and move to the United States. They want to have their wealth there. They want to work there. It is one of the few countries in the world that has positive demographics, whereas China, which is the leading player in BRICS, probably the biggest domino that even gives BRICS any weight, is having a declining aging population. So these are the things that really at the end of the day determine world reserve status, not to mention military capacity. But outside of all that, guys, this is not the macro thesis we need to talk about. This isn't even the thing that is spiking volatility as of yesterday and is continuing to, I think, signal here the next big move. No, instead, it is a much bigger event here. And that is the Jackson Hole speech that is going to be happening later on today, where Jerome Powell is going to speak on the Fed's monetary policy projections over the next couple of months and the Fed's tone for the upcoming meeting in September. Now, I want to let you all know here that this is not another FOMC meeting. This is a speech. It's kind of mid-range thesis from the Fed, from Jerome Powell, essentially speaking about what the Fed is looking to do in the next meeting, next few months to come. It's kind of a forward outlook for the year to come. Now, many of you probably will remember that if we take a look back at equities here, in August of 2022, this is where Jerome Powell shut down expectations of any rate cuts coming soon. And in fact, unfortunately said what we have been saying on this channel for a long time, that the Fed is going to have to continue increasing interest rates, continuing battling against inflation, continuing to contract its balance sheet, and it's going to have to keep those rates and that tightening effort there for a longer period of time. And the problem is that since then, since that last Jackson Hole speech, we are at a higher price range than when we were back there. If the Fed is not done with its job and is even willing at this point to signal further rate hikes and that we're going to keep them up there for longer, and the AI narrative is starting to die, we've got a lot of pain coming. A lot of false hopes, a lot of false narratives that people have been sold on that are going to collapse under their own weight. That's not me being melodramatic, guys. I just want to ask you guys here, the question you've got to ask yourself is, do we have the weight now for this just to, continue over the next year or so to new all-time highs? This is what some people, I think, really think is going on here. Again, I'll just draw a general line chart here, right? Again, look at this chart here, and then I have a couple questions for those who may be in that camp. Where's the liquidity coming from? Right? Because the Fed's contracting liquidity. We've seen global liquidity. It looks like not just the Fed, but the entire central bank, conglomerate as a whole, and all the things that can provide stimulus, like the Treasury General Account, all those things are essentially contracting en masse. So what's going to kick off a new bull market, right? NVIDIA had a 20% beat on revenue and 20% beat on income. Not even considering the revision they had, right, from the last previous financial reporting. The question is, how much more do they need to grow to keep up these valuations? Well, when you really think about it, a $1.2 trillion valuation and a massive PE multiple that people are paying, they got to do really, really well. They got to start playing catch up big time. Generative AI has got to go supersonic. Well, it's been around since October of last year. And I don't see that application. I don't see the kind of killer application or day-to-day use case where generative AI is just essential for everyone to use and companies are adopting it en masse. They're talking about it, but I care about actions, because actions lead to financial reports. Financial reports lead towards earnings, and they lead towards actual growth, sustaining the companies that back these valuations and the valuation acceleration. If that's not happening, or if this is a one-off quarter, then we are in for a lot of pain, guys. We'll see. Maybe we're wrong on this, but I gotta tell you guys, I'm gonna come back here to the Fed Watch tool. You guys remember back a couple episodes ago, we've been in this minority that they are going to raise another 25 basis points. This has accelerated another couple points here. This minority is getting bigger and bigger. And while we may sound crazy, we might sound negative, we have been here time and time again. We said that the federal funds rate since back last year was going to go all the way past 5%. It has gone beyond that now. And it is looking as if the Federal Reserve is either going to have to keep it this target range for a long time or might even take it as high as the upper range of 500 basis points to potentially up to 600 basis points. Markets are starting to pick that up here in the VIX. And if we really keep whipping higher here and we get above 21 points on the VIX, you can kiss any bull market hopes goodbye. It is going to get very, very bloody if that's the case. Last chart I'm going to close on here. Yield curve is finally starting to uninvert here. Start to reaccelerate higher. Might mean that something's about to break. We don't know what it is. Could be a couple months out. But I think equities are going to start to make their move big time. And that also comes back here to Bitcoin and altcoins. For Bitcoin, we think at a minimum, in the near term, we're coming down here to 22,000. Next target level would be somewhere here around 19K to around 20K, as this was a range of some prior support. But we think in the grand scheme of things, if we take it here to the weekly, we're coming down for a third lower low in this cycle. And unfortunately, because we pushed it off, we could have just had a third lower low much sooner, right? We could have tightened interest rates much faster. We could have reduced the balance sheet more aggressively and caused a bit of pain in the short term. But unfortunately, the central banks of the world are playing catch up now. They didn't play aggressive at the beginning. And unfortunately, asset prices and all their hopes are going to come crashing back down and give us that proper capitulative low and knock out a lot of that excess liquidity. So that's my general thesis, guys. Some of you may agree or disagree. Some may think we're being a bit too bearish here, but I'm sticking to my guns here. We have done so for the past couple months, and it's why we've continued to remain in cash. And we're looking to do, if anything, we're going to be looking to build strong short positions here in the next couple of weeks in a variety of different assets. So thank you guys so much for tuning in. As always, if you guys enjoyed this video, consider dropping a like. And I hope more than anything, while it may seem I'm definitely getting a bit concerned here about the status of the market, guys. We are still of the idea long term that there will be opportunity. We will be buying into the market. I don't want you guys to feel we're going to miss out on it. But again, when you see price action like this where Bitcoin is back where it was in March, there's no acceleration in price for the last 6 months. We've got to be cautious. Anyways, have a wonderful rest of your day, guys. I will see you all next week on Monday, and take care in the meantime.